live alerts and proof with P&L, proof from a live American real brokerage account, Fidelity. Anyway, welcome active traders to our Trading Week Ahead broadcast, celebrating many years. As always, all information is for educational use only. So our coaching, and thanks to, we finally broke the 5,800 mark in terms of number of you registered for these Saturday shindigs. So thanks for being here. Every single time the market's taken out new highs, it's done at least a major pullback or reversal. It's been a bull trap market. Talking heads are not talking about that. I know you guys are watching, buy, buy, buy. So for those of you who are on, our friends at financial news networks and so forth, please warn the trading community again, as you correctly did earlier, that oftentimes if there's a new high in the S&P, every single time that's been sold down, right? So that's proof that we may get a potential reversal. Now, the market may just run on up and just gangbusters take off and all the rest of it, but typically it's always darkest before the dawn and vice versa. Expect a fake out. Now's a good time. Remember, trading 101, thou shalt sell into resistance areas. Every time we've taken out a new high, see, look from back here. This is S&P 1-year chart. New high, bearish engulfing, boom, drop. New high, just did a pullback and reversed. New high, bearish engulfing, dropped. Schwang, moved down here. Recovered the 200 SMA, took out a new high. Lasted for a good, 2 or 3 weeks back in July this year, summer, before the big drop into the August consolidation. Then we tried to take out a new high and failed, pulled back, trying to take out a new high. Maybe we'll make it. But the point is, every single time there's been a new high, that's what's failed. So be concerned about one of those occurring over here. That's one of the most important things I will tell you this year. Now, in our market, we're going to capitalize on directional volatility in strong sectors. And if we're looking at sector strength, it's always helpful to pull up a sector chart and see what's hot and what's not. Semiconductors, our Philly SOX sector now at a 90-day high, so that's bullish. We take a look at our pharmaceuticals and biotechs. You can see relatively choppy. I'm going to leave those alone. Finance has been on the mend. Banking and finance has been in a nice uptrend for most of October. We're seeing some bearish engulfing right there, right? That's called the bearish engulfing candle pattern that I learned from my colleague Steve Nissen at candlecharts.com. So learn that. Anyway, we'll see if the price that proves a bearish engulfing wrong would be a recovery here. The price that proves it right is if it gets under here, which it did, and stays down here. So, and our VIX is off 6%, way the heck down at 12.5. Now, with market volatility the way it is, we'd be expecting a VIX up in the 1820 plus region, back up here, not way down here. So the VIX is starting to get in way oversold territory. So do look for opportunities to potentially capitalize on that with our VIX ETNs. Anyway, semiconductors are up. Now, if we look at directional volatility in charts that are worth trading, you really want to focus your energy on ones like I mentioned last week, KBH, and this is KBH, and Taiwan Semi, that have good, strong directional chart patterns of a good sustained multi-month 45-degree angle breakout. That's much better than trading iffy, choppy up and down charts. Be aware of your commodities. Like I mentioned, I'm trading UWT on the bounce here because crude's a long bias instrument right now, or crude's a long bias sector right now, I should say, industry group. I don't know if anyone else is trading oil. We had a pop in Lyft and Uber last week. Let me just pick one. Back on Tuesday. And that doesn't make a whole lot of sense, but it must have been some good news. I remember we were looking at those in a live room for both Uber and Lyft. Typically, transports are counter to oil, right? Because so your airlines, anything related to transportation, your trucking, your ride sharing may well struggle moving forward. So for example, with crude going up, We expect that our airline stocks, and thanks trader for that heads up in American Airline, we would expect that if crude keeps going up, the airline stocks are in for a reversal, right? Because that usually happens. If crude spikes, your airline stocks go down. So as wonderful as this chart looks, I would not be trading airlines on breakouts unless they're able to continue on up and hold over the 200 SMA. Now, good setup on American, and thanks for the heads up on that chart. The trader who mentioned that one, we'll add that to the pick list, or the focus list. One of the important tips that I will share with you, having worked with a lot of professional traders over the last 2 decades and having market makers and specialists come to my live events all over the country, one of the things that you learn is you need to start thinking like a Wall Street trader / high frequency trading algorithm, and you need to figure out what are the price points that are likely to draw in additional buyers. And those are all based off fairly basic technical analysis, new 90 or 352-week highs, 365-day highs, or breakouts, for example, here in American, above a 200 SMA line. So we're getting close to the 200. We don't want to go in right under, but if it breaks north of the 200 SMA over 3150, it may be a good play if it continues, but not if crude keeps spiking up. So keep that on the radar. Another good setup is I like the small followed by large whole whale body candle. So that's a good directional bias. If you look at good strong breakouts, you can see yesterday ran 29.4 up to just under 31. If we look at other high volatility charts yesterday, XNet was a good one, and it doubled, right? Going from 2.5 up to 5. And Panduo is also another good play. And this one I covered for my members at the long call there yesterday. I prefer charts in the $15, $20, $30, $40 share range, as I've traded millions of dollars worth of stocks and ETFs in that range. In my live room, we don't cover expensive stocks over $60 or $70 a share, and we don't cover penny stocks or low float, thinly traded instruments that are easily front run or manipulated by unethical people running momentum chat rooms. Instead, we like solid charts that have good directional volatility and volume to work with. Volume is safety. There's safety in numbers. You don't have as much slippage or wide, expensive spreads, right? The more volume you get, the tighter that tightens up the spread. And if you're a small cap trader, it's especially critical that you don't trade something that's only trading a few thousand shares a minute that may have, a 3 or 5 cent spread, because if you're trading any size, that's going to kill you. So what you want is volume plus volatility. 2 V's, a trader's best friend. And this is a good example of one of those. All right, what else do we have going on? What a chart. Swoosh. Now, you don't want to chase, right? So buying on Monday up here is probably a stupid idea. It's more likely to do a little false breakout and pull back or something. So usually you get a pop, and then on the following day, a mean reverting drop, or at least a pullback drop to the upper range of the previous candle pattern. So you really don't want to overtrade here. And let me know if any questions. Wow, a lot of people here. Thanks. Good smart question from Steve. Hey, Steve. Hey, Iken, what do you do if we miss the correct entry timing and it keeps moving in that direction? Just re-enter, right? You'll find in our current markets, it's so important that you look at how to re-enter successful trades. I often get faked out, right? Or, for example, I think what was it in JDST yesterday? Yeah, I bought the first move, I bought the second breakout, but then I closed the trade right on the pullback. So I didn't get the last tail up, and I didn't hold into the pullback either. So my first trade was the best trade right out of the gate, but often it's the opposite. Often, you may put on a trade, you get stopped out, and if you just, sit on your hands, then you miss out. So be prepared to re-enter your trades, whether you're swing or day trading, several times. And, if you're looking at good, strong breakout plays in our current markets, be sure that you focus on out price action. Only, if I could go back and wave a magic wand and redo tens of thousands of live real money trades the last 2 decades, the one thing that I would do differently is only trade charts that are above the previous day's high, right? That's the number one filter. And I've taken a lot of shots for my whole life, things that have bounced inside ranges, mostly unsuccessfully. If I were to be very candid and try and think back, trying to think over 20 years of tens of thousands of trades, but I'm sure that my win rate is under 50% trying to buy stuff that's in the previous days inside the range. So make sure that you're focused on breakout. The second thing is always expect or anticipate a false breakout within the first 20 or 30 cents above the obvious move. So you get a false breakout, a pullback, it shakes out people, then it runs without them. And so to capitalize on that and to do it the right way, maybe you get there, you get shaken out, do be eager to retrade it or re-enter, or even better, join my live room and I can give you trigger points that I found over the years are more likely to help us avoid false breakouts. But that's a good question. Hey Richard, if a small account allowed 3 trade weeks, trade more. One thing, remember, if you can trade in cash as long as you have enough settled cash as much as you want. There is no 3 trade in 5-day PDT limit if you're trading cash. That's only for margin trading. So you can trade a cash account. The only thing is your settled cash gets chewed up. So if you're trading a small account, I've tried this, you have to usually maybe wait a couple of days. Now it used to be a 3-day window to settle. Now it's only 2 days. So if I buy Monday and sell Monday, that cash settles on Wednesday. So it resets my money in a small under 25K account there if you're trading cash. So you can trade more than 3 times in a 5-day round trip window if you're trading with unsettled cash available. So that's another thing. The other thing is you can always open up, and I urge you to do this as part of your exploration and testing successful trade approaches, open up a couple of different accounts, right? I mean, my two recommendations are Fidelity and Ameritrade, because they give you the top end of their trading platform, not crippled versions like, unfortunately, certain other discount brokers that I've used for decades are giving light versions. That's crap. Don't do that. Get your full trading workstation versions at Fidelity and Ameritrade, and take a lot of shots. Yeah, PDD, because the volatility question, did I buy a 9 on that? The alert was here for the 9. Swing trading, you would never swing trade it there, right? You never buy a 9 ever for a swing trade. But for a day trade, 39.7 was the right call because it was right above a 50-cent window. I'm always evolving and updating strategies based on volatility metrics, and we're looking at highly volatile charts that are directionally strong. You can play tight, you can play more aggressively. You always want to be, how to say, pardon my, I've been broadcasting all week long to so many hundreds of folks. You're always looking at trading directional moves the right way. All right, I'm going to wrap up in a few minutes here. Hey, thanks. I appreciate the kind words. Hey, Mira, thanks for the heads up. Hey, Walter, thanks for SMH. I agree with you, Steve. The PDT is stupid. It needs to be dumped. Yes, I said that 17 years ago, and I agree. Right, John? Hey, Rich, not sure about that one. And hey, Mira, yeah, not sure about the picture. Anyway, we're going to wrap up in a minute anyway. So one thing you want to do in our current market, let's look at some strategy tips for upcoming week ahead. What do you want to do? Anticipate a potential fake out in the S&P. You may want to capitalize on it. If you're already long, the other sector I'm in, by the way, is the pot stocks. I'm currently long many of the cannabis sector instruments. Those are the ones I like to trade. What I'm currently long in is I'm long a little Canopy Growth. That's called a hammer, right? And so I bought on the way up Canopy Growth. I'm in Cron. I'm in Tilray. I'm in Hexo. I think I'm in Hexo. It's not working out, right? And I'm in MJETF. But they're all starting to bounce nicely. Tilray has the biggest volatility in terms of point range, right? Had been 46 a share, excuse me, and got cut in half all the way down here to right under 20. I'm long Tilray. So that's another quick tip. The two sectors that I think may be actually 3 sectors, 4 sectors. Pay attention to gold and inverse gold. Pay attention to oil. Pay attention to the pot stocks. And pay attention to all the inverse instruments, whether it's TVIX or TVIX, TZA, QID. They've all been sold down sharply and may be due for a reset off their previous lows. They run up, they come back down. And this guy's TZA. So when you're looking for good trade setups moving forward, look for what's strong. What are people buying the most of, right? So always good to go with directional volatility. The trend is your friend until it's not, but at key resistance areas, which we're at right now, kind of like a fork in the road. We got a eyes on the prize. We got a markets at new highs or right under, trying to take out new highs. Any good professional trader worth their salt anticipates the breakout and then a potential fake out. So the expected pattern that I expect is we may get a breakout that may last even up to a week or two, but at some point, if we do take out and hold over the 30-30 in the S&P, I 100% expect that we'll get some kind of a moderate, if not major, reversal within 2 weeks after that occurring. So that's likely to occur by mid-November. And we may see another epic drop like we saw last time. See what last November, history repeats itself, right? So often, last November we got the breakout, then it dropped, wiggle around, and then December was the big move down. So November was fake out, sold down, cycled up, and moved down. Anticipate over here, we may get the move up and then a breakdown. So my caution, the reason I mention that is I don't want you to be Pollyannish about following the talking heads on TV and everybody's buying. It's a great day to be trading on Wall Street. And then everyone gets surprised who's not a professional about the market's selling off. The VIX is now back up at 20. The S&P is back down at 2,900. What the heck? How did that happen? Think about that ahead of time. Anticipate. Good professional traders react. We don't predict, we react. You never predict, but we anticipate potential reversals and we plan for them. And you put that in as part of your trading plan. So if the market rallies and continues on up indefinitely, well, good for it. But smart money is on a fake out, at least according to the folks that I speak with. So do be aware of that. Do learn how to capitalize on these daily patterns and more as a member of my live room at tradingopen.com. I do have a 30-day trial, just $47 non-recurring. So at the end of 30 days, it's over. And if you want to join as a member, you're welcome to. And if not, no, say thanks for having been with us. Again, I apologize. I'm recovering from a slight cough here, plus all the speaking I've been doing this last week. Anyway, in the live room, you get a alerts table every single morning, 5 days a week, that has my picks and long triggers and short triggers identified before 9:30, actually before 9. So you got at least half an hour to see how to develop a daily trading plan based on the best moving ETFs. And we also cover gaps and breakouts for small caps and commodities and the small caps, commodities, chips, Micron and AMD are our two favorite chip maker breakouts and more. And so that's something that's included as part of your Trading the Open membership. And if you join as a trial, it's just at $47. You get over 30 hours of training with me each month. And you have my word, I'm very hardworking. I answer questions. I'm friendly. I'm easy to work with. I like to give you insights in terms of specific entries. And we also do tape reading for entry and exit walkthroughs live. So I'll often say, new traders sell half now, trail at stop at break even on the rest. Experienced traders scale in if it breaks over this new trigger. So that's it. Here's the workstation too, by the way. Our last thought here before we do our swing scans coming up in a few minutes. What a nice desktop. Sorry, my Trading the Open workstations populating up in an upper one of my mini monitors here. But this is what my live room workstation looks like. I was working on research last night, so sorry, some mess there. Anyway, we've got the day's hot charts, we've got tape, we've got the trend. I teach how to use the trend daily, and that's really important that you learn how to use the ARMS index. So that's part of it, along with specific alerts and walkthroughs. So join me at tradingtheopen.com. Be sure to join the live room. It's my best service, my core service, and hundreds of folks around the world. So great to see y'all here. Have an outstanding week ahead. Be careful, play it safe. Anticipate false breakouts, right? And so when things start to bounce in the world of inverse instruments, be ready for the pivots in those. Be ready for breakout continuations in a broad market if it continues to run up. This is, kind of an over, and this is my momentum indicator, the S&P that I developed. We have lots of new features in the live room for everybody. And so many hundreds of folks around the world. We got new members worldwide, and so I like to expand and enhance the service. So we do a lot more expanded trend coverage. This is a 4-minute spiders chart, basically showing directional pressure of the market visually. So if we have a lot of green candles, we know, hey, we got a long bias, and if the trend's under one, and vice versa. We've got our daily watch list. We got our ETF watch list. We got thumbnail charts. We've got our 2-day close-up chart. We'll zoom in oftentimes on the 1-minute chart. And that's exclusively at tradingtheopen.com. So best wishes for success. Be sure to join the live room. It's only $47 for 30 days, non-recurring. So at the end of 30 days, it doesn't turn into a subscription. You can see that in the PayPal thing. It's a buy now, not a subscribe now link here. So, or if you want to use Visa or MasterCard, that's there as well. So take care, play it safe out there, play it smart. I hope I can be part of your success, right? I've worked with so many thousands of folks, and I've learned every mistake the hard way by taking lots of stops. And so hopefully I can teach you how not to take stops and how to make better winning trades more often a way of life. So take care, and I will see you guys in the live room next week, I hope. Take care, and best wishes.